Hello everyone, my name is Guadyar, and in today's video we will learn what is SMC. Today's video is an intro in which I will tell you what is SMC and why we need SMC. Look, all of us traders, no matter how many you are, all those traders work on chart pattern, candlestick pattern, indicator, and normal price action. You saw a pin bar, you saw an inside bar, you saw a hammer, you jump. You saw a W, you saw a head and shoulder pattern. You saw triangles, you saw trade line, you saw support resistance, you will jump. You put the indicator, which is your indicator, EMA, MACD, RSI. You trade on them by using 60/40ths or whatever your EMA is. 9 EMA, 100 EMA, 50 EMA. The price is tapped on it, you get rejection. You trade, and despite doing all these things, what data comes that 99% of traders failed in 2022? What happened after that? What happened is that 99% of traders fail even after using all these things. What do you think about the daily market trade of trillions of dollars? I am not talking about 1,000 rupees, nor am I talking about 1 lakh rupees, nor am I talking about crores of rupees. Thousands of crores of trades, millions of crores of trades are in the Indian market daily. Daily. There are many trillions of trades in Indian market. In our stock market, there are so many trades every day. There are many big players. There are many bank people, institute people, hedge fund people, FIAs. What do you think? Do these people trade by looking at support resistance, trade line, or indicator? My question is that you have to put in your mind that do all these traders still think that they trade by dragging indicators or support resistance? Use your mind a little bit. Use a common sense. What do you think that they are full crores or billions of rupees? They just look at the support resistance or trade line indicator or chart pattern. I am giving you some examples. Suppose we trade. Above W, you must have seen many live streamers, many YouTuber videos, and you hear a lot about W patterns in it. You saw the W pattern. When its neckline breaks, then you take a trade. Something retakes like this. The price goes up, retakes, you take a trade. You are taught to make a long position like this. Keep a slight stop loss, keep your target up. You are told but actually what happens? Price down. Understand my point. What I am saying is, where did buying come from? From neckline? No, then buying came from here. Market came down, tapped, and here. So why people are teaching on neckline? Actually, where did big players buy? From here, and where are people teaching? From here, and when you trade here, you fail. I am not saying that W doesn't work. W works. No doubt, but 3 to 4 times out of 10 times it fails overall if it doesn't work. 3 to 4 times then people won't have trust in it, and if people don't have trust, then big players won't be able to manipulate people, and retailers won't trade on it. Big players want you to see WM pattern, head and shoulder pattern, trade line, support resistance, and keep on moving in that and they manipulate those places and their liquidity is created. And basically, what is liquidity? We understand that you and me, whatever buying order or selling order, you are putting buy, sell, whatever is happening in 1 lot, 2 lot, 10 lot, 12 lot, 15 lot, it creates liquidity. At that point means you must have seen that the market is at 45,000, then 150, then this momentum of up-down is due to liquidity. Liquidity is a market fuel. The market runs liquidity, and the big player needs liquidity to fill the order. Now, you will say that, why does the big player need liquidity to fill the order? Now, understand my point. You have no doubt more than 1 lakh rupees or 10 lakh rupees or 1 crore. Let's assume you have 1 crore rupees, and what are your trades in lot size? 10 lot, 12 lot, 20 lot, 50 lot, 100 lot. You are happy. You have so many orders but when we put so many orders in the market, they are filled immediately. Means you put an order of 50 lots, the market filled it. You put an order of 20 lots, the market filled it. Why? Because the lot in front is ready to sell. Because our middle class people of 1 lakh, 2 lakh, or 10 lakh, they are in front of a lot in the number of crores. Have you ever heard that there are a lot of people with 10,000 crores in my area? You must not have heard, or the owner of the property with 1 lakh crore. you must not have heard. So when they are big players like FIAs, DIAs, people with hedging funds, people with bank institutes, when they put an order of 1 lakh crore, or 10,000 crore, or 15,000 crore. So what do you think? When they put it in the market, the order fills up in one go. Asterisk, basically, they create a zone where you get confused whether you want to buy or sell, and that zone is called sideways. And when this zone is created, means when this is a sideways market, then what happens? Some are buying, some are selling, some are buying, some are selling because of premium. Decay stop loss hits, or again trade goes and stop loss hits asterisk, and after collecting all the stop loss, their orders get filled in the market, and they give momentum in the market where they have to go. Means if their entry is on the call side, then the market will go there. If their entry is on the put side, then the market will go there. So basically what I am saying is that if they are trading trillion-dollar trade in the daily market, then in this era, 2023 is still going on, and in this era, you are still thinking that they are trading on support resistance or trade line or indicator. Asterisk, these things are told by SMC, and in the coming days, this SMC's glasses will be in your eyes. And you will also be able to understand the chart in that way. So here you see there was a high time frame POI, and the market tapped the high time frame POI, and a selling came from here. I made a sell position, put a small stop loss, and I captured the whole momentum of 118. Again came down asterisk, made an I, tapped on OB, and as soon as I tapped on OB and took rejection, I made an entry of a sell, and I captured 115 in it. Again, an IDM came from here, went up, tapped on imbalance, and made an entry of a put from here. So now all these things are new for you. Imbalance, OB boss, POI, chalk ID, M liquidity sweep, SMT, all these things come under SMC. Asterisk, I am going to teach you all these things for free. I just need your time. Just watch my 8 to 10 lectures that are going to come now, and this is my guarantee that there will be a lot of changes in your life, and I will change the whole view of the chart. How many candles you see here, how many indicators you put, how many W patterns, head and shoulder patterns, triangles, red lines, support, resistance. You see all the things, asterisk, but ASMC player never sees. These things, SMC player sees liquidity. If you don't know where the liquidity is, that means you understand that you have become a liquidity myself. What I mean to say is that if you don't know where the liquidity is, that means you have become a trap yourself. Then you have to avoid the trap. Asterisk, 99% of the people who trade with big players are trapped. And this is the reason why the ratio of profitable traders in the Indian stock market is very low. Because they have a lack of knowledge in the Indian market. People don't want to learn real things, but I want people to learn from the essence. Learn in advance, and neither I have given them support, resistance, nor trade line or price action, or anything like that. I don't want to teach them general price action, asterisk. I want to teach them the advanced things that I do myself. I hope you understand what SMC is. Basically, SMC is a smart money concept in which all these things are used. Inducement, boss, fig, order block, order flow. I am going to teach you all these things, and within 1 week, I will upload all the lectures on YouTube.**. So, stay tuned and be ready to watch all the lectures step by step. Watch all the lectures step by step, and when you complete all the lectures, you will get the idea that you have to trade on SMC or trade on trade line asterisk, and just put one question in your mind that, do you still think that many trillion-dollar trades are done by looking at support, resistance, or trade line? Thank you all for watching till now. Let's meet in our first lecture of SMC Right, which will be our fractal course, in which we will learn what is fractal. After that, we will move on to the upcoming lectures. So see you in the fractal video. Bye everyone.